I'll be sharing about the local litigations. The first case that I'll handle is Fintel Limited versus the commissioner. Okay, Fintel Limited had a contract with one of its clients that for every contract that will be paid late, they'll be paying an interest to it. And KRA realized that Fintel had accumulated a lot of interest, and it was in fact expensing it on its books as an expense. KRA saw that this one was like they were trying to reduce their taxable income by reducing the taxable income less the interest, yet they had not paid the contractual fees. In this case, KRA assessed them and charged them with the withholding tax on the contractual fees, which is under the confines of Section 35 of the Income Tax Act. Fintel did not feel like KRA did a good assessment. They went to High Court, and the High Court withheld the opinion that the High Court said that the opinion that they had not paid the contractual fees by then they should have not paid the withholding tax. In this case, the High Court was arguing that withholding tax is only paid upon payment of the prerequisite amount. And so KRA felt like, no, this is not the way to go. So they went to Court of Appeal to seek further clarification. So the bone of contention here was about paid. They were all arguing that, Fintel was arguing that they had not paid the contractor the amount that they owed him, and so they were not obliged to pay withholding tax, since they had just recognized this as a liability, but they had not paid the contractor. On the other side, KRA was arguing that the fact that they have already even taken the interest and expensed it when they were filing their tax, KRA deemed this as something that was already credited to the third party, and Fintel was just trying to avoid paying the withholding tax. So they went to the Court of Appeal, and the Court of Appeal made a decision after the various arguments, and the Court of Appeal said that payment in this case was not just upon giving some valuable thing or just paying casually like you pay a cash or a check, but payment in this case was a book entry that because they had already noted on their books, they needed to have paid also KRA the sum amount of the withholding tax that they owed KRA. And so Fintel failed under this case, and so KRA succeeded in their appeal. When we go to Brookhouse School is an international school, well known to many. Brookhouse was giving their employees, the dependents of their employees, the dependents were allowed to learn in the school without paying no fee, paying at zero fees completely as a benefit. Okay, KRA had already given KRA through its wisdom gave Brookhouse an advisory and told them, since they are not paying fees, you need to surcharge them. It's an uncashed benefit to the employee, and so you need to tax the amount that they're not paying to their various pay tax obligation. But Brookhouse was not taking that idea, and it was saying that since we will be deducting the amount from our corporate tax, the amount that they could have paid we will be deducting as a disallowable expense from our corporate tax, we can't again go ahead and tax it to the employees, since it will be on our corporate line under Section 16. So KRA held on Section 5 that was speaking on, that was very articulate that you need to charge the non-tax benefits on the employee. But Brookhouse was on the other side saying that, look, we've been deducting this on our corporate tax the other side, and so we cannot go ahead and deduct it on the employee. So they went to the court, and the court, in its wisdom, also found that Brookhouse was on the right side. This is how the court argued. Section 5 was just a general provision. It was not very specific on the non-cash benefit in terms of education benefit. And Section 16 was very articulate, and it said that it was very specific, and it said that for every education benefit given to the employees, once it's deducted on the corporate side, or once it has been deducted on the corporate side, it should not be taxed again to the employee. And so Brookhouse won this case on the ground that the specific provision was to be applied and not the general provision as KRA was insinuating. Brookhouse also was arguing that the assessment was far beyond the 5-year statutory period. This is a fact that the court dismissed and said that the assessment was just within the 5 years, as it was within 1st December 2015 and 7th February 2017, which is just within the 5 years of the statutory limit. Let's go to the China Road Bridge Corporation. China Road Bridge Corporation, if you can recall, there was the SGR that they were contracted to construct. And when they were contracted to construct the SGR, they needed security in terms of the security to maintain to avoid burglary and thuggery of the railway products that they were using. So they needed a security firm, or rather a security personnel to handle their products that they were using by then. And so they through the Railway Commission, they contracted railway police units who were to offer security. Security was offered by the railway police unit, and in the contract they stipulated that CRBC will be paying the railway police unit some allowance. I don't know the equivalent, but I guess it was a good allowance. KRA, upon auditing, found that CRBC was giving an allowance that was tantamount or equal to employee benefit, and so they wanted CRBC to be deducting the allowance that they were giving the policemen, or rather the police unit, as a pay benefit. And CRBC was very adamant, and it said, no, we are not the employers of the police. We are just giving an allowance, but the police who are guarding here are completely not our employees. They are the employees of the National Police Service, and so we cannot be obliged to remit their allowance to KRA because we are not their employers. And they argued that the Act in itself, Section 37, in itself said that the employer and employee relation is the only way through which one can remit a pay. And so since they were not the employer, they could not remit such allowance to KRA. KRA took this to court also. And for sure, their argument was according to me, it was a bit vague, because they were like trying to imply that CRBC is an employer to the police, which was, to me, it was a vague argument. I know maybe KRA was just on the target of the big allowance that was being issued to the police unit. Okay, the court also found the same, was in the side of the CRBC, and the court was very articulate in its ruling, and it said that the Finance Act Section 37 only talks about an employer and an employee relation, and not any other insinuations that KRA was trying to bring about. And so KRA failed to prove to the court that CRBC was indeed the employer of the police that were guarding the China road bridges. Let's go to a case of VAT. This is Highland Mineral Water versus KRA. This was a case regarding input VAT, claiming of input VAT. It was a heated case where Highland, from the past or the previous years, it was not filing VAT. And so it decided to start filing, I think, after the audit or so. And so KRA came in and started to limit them that you cannot claim input VAT for the past 6 months since it's already overdue or it's time barred. And so the appellant, the Highland Mineral Water, was arguing that the Act in its provision says that the Act in its provision states that you can claim input VAT within 6 months, not at the time of filing of the return, but at the time of the supply. While KRA was arguing its point at the time of filing the return, since they were filing late, they could only claim up to 6 months previously. Highland was arguing that provided, even if it was for 2020, and the input VAT falls within the 6 months within that 2020 period, then they were allowed to claim the input VAT. Yes, the court had the argument, and after much deliberation, the court made a judgment, and the court was very articulate again on this. It said that input VAT is very crucial. It's very crucial to every taxpayer. And the Act does not allow KRA to disallow deduction of input VAT, regardless of the time that is filed, as long as it's within the 6 months period. And so here again, KRA lost on the basis of, they were arguing in terms of the time of filing, instead of in terms of the time of supply. And so mostly, when you are filing VAT, let's say right now you decide to file your last year's VAT, you can file your last year's VAT and claim input VAT for the last year's, provided it's within the 6 months of that, last year. You are now allowed to claim your VAT, and KRA is not allowed to disallow such input VAT claimed after this judgment. Those are the few cases that we sampled for you to learn through. Cases are very crucial when it comes to they inform our tax landscape each and every day. And these cases, most of them, after these rulings, you find KRA tries to seal the gaps, and so it's good you understand the cases, because when you understand the cases, it becomes better when you face a similar situation. You can also handle a situation with regards to the Act, or if you feel you can't interpret the Act, this is where you involve the tax experts, and we are always here to interpret for you in such a case.